On today's World Insight, Hong Kong's stablecoin bill, focused on digital tokens pegged to the HK dollar, takes effect beginning August 1. What does the bill mean for the future of digital assets?
Hello and welcome to World Insight with me, Tian Wei. Upon the 20th anniversary of Hong Kong's return to the motherland, the Stablecoins Ordinance, the world's first dedicated legislation specifically governing fiat-referenced stablecoin, is set to take effect this August. A stablecoin is a type of crypto token backed by a reference asset, typically a fiat currency such as the US dollar or the Hong Kong dollar. The new regulations, spearheaded by the Hong Kong Monetary Authority, are to integrate stablecoin into the mainstream financial system and bolster financial efficiency and stability in digital asset markets. As the stablecoins become a significant part of the financial ecosystem, what does the upcoming initiative reveal about Hong Kong and the global status of the Chinese RMB, and how to compare the situation going on in the United States and that in China? Let's hear answers from our panelists. For more discussion on stablecoins, joining us in Shenzhen, Xiao Geng, chairman of the Hong Kong Institution for International Finance. Also in Hong Kong, Hong Hao, managing partner and chief investment officer of Lotus Asset Management. Last but not least, in New York, Anthony Chan, former JP Morgan Chase chief economist. Gentlemen, welcome to the program. Professor Xiao, Hong Kong passed the legislation back in May and is going to take effect in August. Given Hong Kong as a gateway for the mainland when it comes to financial innovation, what is likely to be this great significance?
The significance is that, in the past, we have actually shares, which has traded in Hong Kong, but assets in China. Now we have stable coins in Hong Kong, and all the future products, the underlying assets is going to be in China. Very important, but it's an early start.
Early start, but one thing is very clear, according to the legislation, how Hong Kong Monetary Authority need to give the approval to whoever is trying to issue the stable coins in Hong Kong. So to what extent do you think this legislation can be compared to what is being called as the Genius Act in the United States?
Hong Kong government has a set of standards for the approval process. Obviously, for the list of companies who has been issued the license to issue stable coins, we consider they are very large internet platforms with very large financial resources, and also they have a very long and stable operating history in Hong Kong. I think the names that you mentioned just now, JD.com, Tencent, and also Alibaba, these are very well-known household names in China. And I think, we're not surprised at all that, they were given the license to issue stablecoins.
Anthony, United States now is busy with the Genius Act, which is also a legislation working on the future of a stablecoin, given its fast development. Now, to what stage do you think this is in terms of stablecoin development in the U.S., and what can be its connotations worldwide, including for China, both mainland and Hong Kong?
One of the benefits of stable coins will be to lower transaction costs. And that is going to be even more important when you do cross-border transactions. That, of course, is going to be very important for China, because now they'll be able to trade back and forth between Hong Kong and certainly the mainland in China and also other countries. We know that in the United States, there's always the problems with people trying to conduct a lot of transactions and have to incur huge costs when you go overseas. Stablecoins certainly will reduce that problem.
Anthony, in the U.S., we understand Circle and Tether are some of the major ones that have been issuing stablecoin. And at this moment, the latest news is Circle already trying to apply the kind of status for banks in terms of both issuing and using stablecoin. So what does that say to the commercial players now cryptocurrency vis-a-vis traditional banks?
Well, keep in mind that when they talk about stable coins in the United States, they also use it to buy cryptocurrencies. So they use it for many reasons. But the standards in the United States are much lower than they're going to be in Hong Kong. In the United States, virtually none of these two companies, Tether or Circle, have 100% collateralization, which is something that's going to be required in Hong Kong. Also, in the United States, these laws are trying to make things a lot easier for these companies. And that's one of the reasons why in the United States, you're starting to see other companies joining in the fray. We have PayPal. We have banks that are talking about joining, JP Morgan, Wells Fargo, Citibank. And even Amazon is thinking of, and Walmart. They're all thinking
about
of
the
joining.
competition over there, even among the players based in the United States.
Yeah, a lot of competition. I think there'll be a little bit less competition in Hong Kong because, as I said, the regulatory standards are much, much higher, to the point where I think that some of these big stable coin players in the United States would not be able to get a license necessarily in Hong Kong because of the high standards. So I feel a lot more comfortable that the regulators are making sure that nothing can go wrong in Hong Kong. And in the United States, it's more like the wild, wild west. So there's always the risk something could go wrong.
Go to you, how your understanding of this, the commercial competition, and what Anthony just said, the so-called U.S. practice vis-a-vis the Hong Kong practice.
Yeah, well, I very much agree with Anthony. I think the U.S. is the Wild West. If you look at history, right, so there are a number of very notable, significant stablecoin crash events happened in the past. The most recent one being in May 2002, when there was a 20% value plunge in the USDC, which was issued by Circle, right? So there was a history of instability in the system, and also there are many other mini crashes of the USDC in the past couple of years, not just the May 2022 one. So from history, judging from history, we can see that the system has a lot more to be improved. And I don't think the system is complete just yet or very, very safe to use. Well, if you look at what's happening here in Hong Kong, so even though the players got the license already, and they're still drafting plans, trying to come up with a more comprehensive way to operate the system. And also, I believe that most of the stable coins here in Hong Kong would be issued based on Hong Kong dollar rather than the U.S. Treasury. And the Hong Kong dollar is pegged to the U.S. dollar. Mm-hmm. And also the HKMA has a very large FX reserve. And therefore, we can sort of assume that the stable coins here could be more stable than the ones in the U.S.
Interesting. Gang, your thoughts on this?
Hong Kong actually already have a stable coin in the without the digital technology. That's Hong Kong dollar, pegged to U.S. dollar, right? So I would compare the new stablecoin issuer in Hong Kong very much like the Hong Kong dollar issuer, which actually is a 3 private bank, right? Mm-hmm. So for Hong Kong, the regulation is essential, So I think because in the future it's likely to have stable coins pegged to the offshore RMB. So in a way, Hong Kong experiment, I think is very, very important because stablecoin is a bridge between the so-called virtual, asset and the real asset. And Hong Kong has the backing of a huge market. Even the JW.com, all this Ali, they already have a lot of transactions, payment in traditional technology. But with new technology, we can find the efficiency, low transaction costs, but at the same time, I think regulation is essential.
Anthony, to you, we understand that even the year 2024, the stablecoin has soared in the United States, both the issuance and the use of it. On the one hand, you could say in the market economy, competition could always make things more, competitive vis-a-vis other players. But on the other hand, this is stablecoin, and it's most of the time pegged to the U.S. dollar or pegged to the certain important currencies that we're talking about. So how would you see the competition vis-a-vis stability?
Now we're going to see a little bit more demand for U.S. treasuries in the United States. They're going to be using them mostly as collateral. Back a couple of years ago, the reserves were a little bit questionable, as Hao Hong mentioned correctly. A couple of years ago, some of these stablecoin manufacturers, companies in the United States, were keeping their money in banks. And then, of course, one bank had some problems, and so those reserves were frozen. Now the movement is going to be towards more use of government treasuries, which, by the way, this is a $250 billion market in the United States. And so if they start to move more and more in the direction of holding those treasuries, that's a new demand for U.S. treasuries, which, by the way, for the United States is a great thing, because there is that trend of de-dollarization where there is the concern that maybe other countries, including China, may not be buying as many treasuries. And now with these stable coins, you'll be doing that. For China, it's a great opportunity with Hong Kong, because now it'll give the opportunity to create a stable coin with the RMB. And so even though they already have the digital currency, the RMB now with stable coin is one step further, because the digital coin doesn't really use the blockchain technology.
Yeah.
But of course, the stable coin does use the blockchain technology.
It's a very interesting direction of discussion as well. Let me just read a quote earlier coming from Scott Bessent, who is the Treasury Secretary of the United States. Quote, "A thriving stablecoin ecosystem will drive demand from the private sector for U.S. treasuries, which back stablecoin. This newfound demand could lower government borrowing costs and help rein in the national debt. It could also on-ramp millions of new users across the world to the dollar-based digital asset economy," end of quote. This is very interesting. Of course, it was, rallying for the latest Genius Act in the United States. But at the same time, this has a big connotation about the U.S. dollar, the U.S. Treasury, and the U.S. debt situation vis-a-vis other economies, including and especially China. Now, Hao, tell me more about your thoughts on the stablecoin development with the U.S. dollar peg and also the U.S. Treasury's future. What does that say to you as an investor?
I think, on paper, it does increase the demand for the U.S. Treasury, because you have multiple players in the market now, who can issue stable coins based on the U.S. Treasury. So basically, the velocity of money circling in the economy will improve, and also the multiplier is bigger than before. And therefore, as the liquidity improves in the system, and the demand for safety asset will go up. So I think it's a reasonable assumption by Scott Bessent. But I think right now the stablecoin market is still very small. Like Anthony said, it's only 250 billion. We're expecting it to go well above $1 trillion quite quickly. As more and more players joining into the fray. So I would say that it is a new found demand for the U.S. Treasury, especially when the U.S. physical condition is in such dire strait. So I think it needs all the help it can from stablecoin.
To you, Professor Xiao, because China, when it comes to crypto token, is still very careful. The digital RMB has been there for some time, but it's not necessarily a huge phenomenon yet. Still at the testing and trial period. So when a stablecoin is happening so fast, especially when it's pegged to the US dollar, what does that say to China, given the backdrop between China and United States relations?
Well, I think now a lot of Chinese companies, they are still using US dollar in trade. Because that's the most widely used. But because the U.S. financial situation and potential volatility, like inflation in the U.S., so the stability of dollar for Chinese traders is actually a problem, because China, when trade with other countries other than US, they might actually use RMB, to reduce the exchange rate risk. So China is actually struggling to develop this future platform so that the tradings between China and other countries can avoid the so-called dollar exchange rate and also geopolitical risk. So that is a very strong force, pushing the experiments in Hong Kong. Yeah.
And how? What do you think?
I think China should use the stablecoin technology. I think stablecoin beats everything else in terms of transaction speed and also the very low cost of transaction, especially when it comes to cross-border transactions as well. So I think for China now, close to 50% of the cross-border trade is settled in Chinese yuan. So for foreign players to sort of buy more and sell more to China, and I would say that stablecoin is one of the better ways to solve the cross-border transaction cost and also the speed as well.
And then is Hong Kong still crucial in that regard, or at the mainland is likely to see a huge wave of stablecoin enthusiasm?
Yeah, well, one would expect that China would open its capital account in the coming years. I think that is the RMB reform direction going towards. So I would say that Hong Kong experience is still very relevant, and also the Hong Kong HKMA actually have been managing the currency peg for a long time now. It's between 7.75 and 7.85. So there is a little bit of a fluctuation, especially recently. There's a huge international capital flooding into the Hong Kong system, and it actually strengthened the Hong Kong dollar, and the HKMA had to intervene for the first time in the last 3 years. So I would say that the HKMA had experience dealing with the currency fluctuations, and it can be applied to the stablecoin management. But when it comes to the private entities who were given license to issue the stablecoins, these are the companies who are very large and very substantial internet platforms. But I wouldn't say that they have a lot of experience dealing with the system. So I would say that the HKMA and the regulation and also the supervision are crucial to the success of Hong Kong stablecoins.
How are you watching this, Anthony, from your side?
Well, the way I'm watching it is that one of the things about stablecoin is that the government really doesn't have control over that market. We know that in China, the digital coin is sort of inside the system, and so the government has complete control and complete knowledge of everything that's going on. But to the extent that over time, China wants to open up its capital account and give the RMB a lot more global exposure, it will have to move in that direction, but it will move very cautiously to make sure that it's comfortable with the process. But in the United States, one of the things that legislation in the United States is talking about is charging a remittance tax. When people that work in the United States are not citizens, they will have to pay a tax to send money home. But now with the stablecoin, because the government doesn't regulate it, they may be able to avoid the remittance tax. In other words, the government has less control. That is something that is an issue for the United States and probably will be an issue for China, to the extent that if stablecoin doesn't permit the government to track all the transactions, may be a little nervous and they want to move a little cautiously.
That is a very interesting question, because as we know, it only costs pennies for transaction in stablecoin across borders. So how will this shape the future landscape of transactions across borders? And what does that say for the so-called big power competition, or shall we say the competition among different countries for the best and the biggest investments from all over the world? Anthony, first.
So that is an issue. And so when you do these cross-border transactions, it's going to reduce the transaction cost so much that it's going to give opportunities to new players. Players that were in the market and entrenched, they will be losing new business. So they have one choice. They can either join the party and also participate in these stable coins, or they will lose business.
does this mean give liquidities much more opportunities to go across borders as much as it could, as it wants, Geng, and how? From China's perspective or from industry insiders' perspective, please?
I think China is a trading country. You know, we in terms of the volume of trading, frequency of trading, you know, it's huge. So when China adopts low transaction cost technology, you know, it's going to change the world. You know, it's so I think we have to look at the future.
I would agree with Xiaogang in the sense that, you know, it's a benefiting technology for China, you know, in terms of cross-border trades, because it offers very low cost transaction and also a very speedy transaction as well. I think the challenge for China really is that, you know, firstly, it still has a closed capital account, right? So if you want to peg the stablecoin to Chinese yuan, it's actually a little sort of tricky, right? So because, you know, this currency is not freely convertible. And I think secondly, you know, because the US dollar is still a dominating currency in the system, so using the stablecoin would mean that you sort of bypassing the SWIFT system and also the US dollar payment system. China already has CIPS, you know, which is an alternative way to do cross-border payments. And, you know, we've been developing CIPS for years, and now, you know, with the stablecoin technology, that can be obsolete as well. I think for the Chinese regulators, you know, stablecoin also means decentralizing the payment system, right? So you're letting non-government players to issue their own stablecoins, which could be representing a challenge to the existing sort of regulatory framework.
By the way, what about the U.S. Treasuries and the U.S. debt as a result of the latest development of stablecoin? Many of them are pegged to the U.S. dollar and U.S. Treasury. According to Bank of America estimate, that every dollar moved to deposits to stablecoins, $0.9 goes into treasuries. So what does that mean, Anthony?
I think it's going to help, but let's not overstate the situation. Today, the national debt in the United States is over $36 trillion. And even though the Treasury Secretary says that these stable coins are going to go from 250 billion, he's actually given a number of as much as $2 trillion. But $2 trillion as a percentage of more than 36 trillion, it's still not completely dominating. The Congressional Budget Office just has also as projected that over the next 10 years, the national debt in the United States is going to go up by another $20.1 trillion on top of the $36.5 trillion that we have now. So even if you have the stable coin go to 2 trillion, but you're looking at 57 trillion dollars worth of national debt, it's certainly going to help, but I don't think anybody should be under the illusion that it's going to solve all of the U.S. Treasury's problems.
Well, I would say that initially it would help the U.S. Treasury demand, you know, because you're printing more money to buy U.S. Treasuries. So I think in a way it would suppress the U.S. Treasury yield and help the U.S. government in this fiscal year. But I think going forward, you know, the demand for U.S. Treasury really is determined by, you know, whether the U.S. government can finance its budget deficit, you know, whether the U.S. physical condition is healthy enough to attract the buyers to buy its treasury. So, you know, whether you're using the stablecoin to buy or using the Chinese yuan to buy, it really depends on the physical stability of the U.S. government.
But the fact that most of the stablecoin issuers are using U.S. dollar to back rather than RMB, of course, given RMB is still not necessarily the most dominating currencies. What does that say? Is it going to create a new trend and fever for US dollar rather than respecting what you have all illustrated, the rules and the logic?
Yeah, well, I think the US dollar is still, you know, 50% of the global reserve system. So I think, you know, initially it's an obvious candidate for people to peg their stable coins towards the US dollar. So we're not too surprised, and especially, you know, at the early stage, you know, of the development of the stable coin, right? So US dollar is a really obvious candidate. But I think going forward, you know, people can peg it with gold, with Swiss franc, with the UK pound, sterling, etc., etc. So I think it really depends on the reserve status of this currency in the system. But right now it is still 50%, well over half of the global reserve is in US dollars.
Yeah, Tony?
I agree with Hong. The dollar is still dominating. And in fact, when you look at foreign transactions, imports and exports, the dollar is a huge part of it. But there is nervousness. I mean, if you look at the DXY, which is the index of the trade weighted value of the US dollar, this year, on a year-to-date basis, the dollar is down almost 10%. So when you see that there is some nervousness out there. So there will be opportunities to create stable coins using other currencies, RMB, or whether you're thinking of the euro or other currencies. Absolutely. And in fact, the Treasury Secretary was asked in the United States, is he nervous about the weakness in the dollar? And his response was, it's not that the dollar is getting weaker, it's that the other currencies are getting stronger. That's not a very convincing argument for me, but that's going to make people even more nervous when you hear things like that.
Gang?
Well, just like the internet, and originally started in the United States, but now the use of the internet is, of course, much widely used in China, right? So the same thing, I think the stablecoin revolution has to be started in the United States. But if China catches up, the fundamentals is going to support, multilateral, kind of system, not just stick to the dollar, right? So that everybody sees the trend. It's just that right now, because China is not allowed to have stable coin. Of course, 90%, more than 90% are using the back to U.S. Treasury, U.S. dollar, right?
Right.
So I think we have to look as internet, all this technology in the history, how they evolve.
Right. Of course, it's not just the United States and China. There are many other players, South Korea, Japan, and those in Europe that are watching this very closely. But my final question and brief answer from every one of you, I hope, is this going to be the stable coin a fever, or is a trend that's likely to stay and set the landscape?
Well, it's already a fever. If you look at the stocks in Hong Kong, with a stable coin concept, it's going crazy.
Yeah.
So I think it's the fever is starting, but I think looking into the future, it's going to be a trend that stable coin technology would be more and more prominent in daily use.
Gang?
Well, I actually agree with Hao. It's already a very serious fever. But I think every technology is driven by fevers, So I think we should take it easy.
All right, Anthony.
I think it's a fever because it's still early days, but once it matures, then it'll basically settle into a trend. But the reason it's a fever is because it's just starting to take off right now.
All right, very interesting. I'm so happy to have your insights and expertise on this discussion. Really appreciate it. Xiaogeng, Hong Hao, last but not least, Anthony Chen. Thank you so much, gentlemen, for being with us. A great discussion on stablecoin and what it means to all of us, and that's all the time we have for today. If you'd like to know more, search World Insight, check out our YouTube channel, follow us on X and Facebook. I'm Tian Wei on behalf of the team. Thanks for being with us, and I'll see you tomorrow.